In this video, I'm going to demonstrate three things. Firstly, I'm going to show you a trading strategy which has had 0 losing trades in 2024, and that's not just an enticing video title. Then I'm going to show you how to code or program this strategy so that you can backtest it in less than a minute using MultiCharts or TradeStation. And then finally, as a bonus, I'm going to show you a second strategy, which is again another highly accurate strategy, which you can trade alongside the first one. As I'm filming this video, it's early January 2025. Over the last couple of weeks, I've been going over my trading strategies to see which ones have worked the best and the worst throughout 2024. Now, one strategy really caught my eye because it had a 100% win rate in 2024. However, I wasn't overly surprised because also back in 2020 and 2021, it also had 0 losing trades. In a minute, I'm going to show you exactly how to trade this strategy. But just before that, I want to talk about these highly accurate, or these strategies with very high win rates. Just because they have very high win rates or are highly accurate doesn't mean they make a ton of money. Unless, of course, you use a huge position size. I certainly don't recommend that. Now, there's 2 reasons they generally don't make a lot of money. Number one is that they don't go for large profits per trade. Normally, and in the case of this strategy, I use what's called a first profitable close, meaning that at the end of the session, if we see some profit, we exit the trade and run. So even if we see just a 5 pip profit by the end of the session, we're going to exit the trade. So that's going to give us a very small profit, but a winning trade nonetheless. It's not always 5 pips, it's whatever the profit may be at the close of the session. And the second reason these strategies generally don't make a lot of money is trade frequency. In 2024, this strategy I'm about to show you, on average, made a trade every 6 weeks. When it does make a trade, it's highly accurate, and it's normally right, it's normally a winning trade. But these signals don't come along all that often, and that's why I wouldn't rely on this type of strategy alone. That's why I always trade these strategies in a portfolio or a collection of other strategies. If you combine 3, 4, 5, 6 of these types of strategies, suddenly you're trading much more frequently. And towards the end of the video, as I said, I'm going to show you another strategy which is also highly accurate, one that you can trade alongside this one. Let's go and have a look at the rules for this strategy then, and then we'll move over and have a look at the performance report. So this strategy works on the daily chart of euro dollar, and it's a long only strategy. It's a strategy which I picked up from an old book written by Larry Williams many years ago. Now, the first condition, we want to see an outside bar, and that includes the highs and the lows. Some of you do ask me about the wicks or the highs and the lows, and yes, it does include those. We'll have a look at an example in a moment. The second condition, we want to see the close of today is less than yesterday's low, and then when we see that, we buy the next open. And moving on to the exits at the end of the session, or very near the end of the session. Session for Forex normally ends around 1700 Eastern Standard Time, so just before that, check to see we're in profit. If the profit is greater than 0, if we're showing some profit for the trade, then we exit the trade. If we're not in profit, we leave the trade open and then we check again 24 hours later, and then we have a stop loss of 200 pips. Here's an example on the chart. Now, what we want to look at is this outside bar here. You can see here an outside bar means that the high is higher than the previous bar's high and the low is less than the previous bar's low. And we also need to see that the close is less than the low of the previous bar. And that's quite hard to see, isn't it? Because the close is here and the low is there. It's just below it. And then once we get those conditions, we buy on the open of the next session, which happens to be there by a little blue arrow. It's quite hard to see, but that's where we bought. And then we're looking for an exit, the first close where we see some profit. So the close of this bar here was actually here. We can see that, and that would have been a negative trade. We wouldn't have been in profit, so we left the trade open. We went back, checked the close 24 hours later, and this is where the close was. So we can see that we've got a good profit 24 hours later, and that's our signal to get out of the trade. So we get out of the trade on the open of the next bar. You can see by the little white arrow there, we've got out of the trade, and that's a fairly decent profit for holding the trade just for 2 days. So a dead easy strategy to identify trades, and really quite an easy one to place the trades, even if you're placing them manually. You just have to be around at the computer around the close of the session, which is about 1700 Eastern Standard Time. So that's the rules. Now let's move on to the programming and then the testing of this strategy. Here we are in MultiCharts. MultiCharts is the software which I use for development, strategy testing, and even automated trading. I've logged into my VPS, which I have MultiCharts running on. If you're looking for a decent VPS, then I'll leave a link in the description down below to the one which I recommend. You can see we're looking at a chart of euro-dollar, and I'm using TradeStation for the data source. It's a 1440 minute, which is a daily chart for euro-dollar. Now I'm going to open the code editor so we can program this strategy. I want to show you how quickly I can program this. I'm not boasting because I'm not even a very good programmer. What I'm saying is it's very, very quickly to test your ideas with the likes of MultiCharts or TradeStation. TradeStation and MultiCharts use an extremely similar, nearly identical programming language. In fact, I wanted to show you how to program it because I was watching another popular video the other day where the guy actually used the same strategy and he was programming and testing the strategy using Python. Now, I can't comment too much because I've never used Python, I've certainly never programmed it, but from the looks of his video, he looked like he had pages and pages of code. I'd like to bet that he had well over 100 lines of code to test this strategy, and I'm going to show you how I'm going to test it with just 4 short lines of code. So let's go into the code editor and write this code. So this is where all the programming is done, and it's called the Power Language Editor within MultiCharts. And I've already named the new strategy. I've just got it here, I've just called it JG Demo outside bar 1. So let's begin. The first thing we need to do is write out those 2 entry conditions. So the first one is the outside bar. So we want to say if the current high is greater than the high 1 bar ago, and the current low is less than the low 1 bar ago. That's our outside bar. And the last condition, we want to see that the close is less than the low 1 bar ago. Okay, and that's our 2 conditions to enter the trade. So when we see those 2 conditions, we want to buy next bar at market. Okay, that's it. That's our entry conditions sorted. Now we just need 2 more things. We need that exit, that bailout exit, or that first profitable close exit, and we also need the 200 pips stop loss. So let's write our exit. So we're going to say, oh, just one thing I'm going to note here is I did include 5 pips worth of trading costs in the report of this. So I'm going to change the first profitable close ever so slightly. I'll show you now. So we want to say if open position profit, now MultiCharts has a function which monitors the open profit at all times. So we're looking at the close of the bar. If open position profit is greater than 0, that means if we're showing any sort of profit, I'm actually going to change that. I'm going to change it to 50 because that's saying $50 or 5 pips. Because I've got that 5 pips of trading costs, it's going to cost us at least 5 pips just to get in and out. So I'm going to say make sure that we're covering the costs and then we see at least a bit of profit. So if the profit's above 50, then we just want to get out of the market. So if the open position profit is greater than 50, then sell next bar at market. And that's it. We only need a stop loss now. Now I use set stop contract. You don't have to use this. I won't explain why now. What we need now is the set stop loss function, which is built into MultiCharts, set stop loss, and then we just need a value. We're going to use 200, and that is the equivalent of 200 pips for this particular instrument we're using. And that's it. That's our 4 lines of code. We just need to hit the compile button or verify in TradeStation to make sure there's no errors in the code. And there is an error. And there's the error, which I left in on purpose, just to show you how this verification or compilation function works. And can any of you spot what's wrong? Well, I've missed out the then, okay? So I've got if the high is greater than the high previous bar, low less than the lower previous bar, and the close is less than the low, buy next bar. We need to say then, okay? So it's very quick to pick up any sort of mistakes. hit the compile button, and we're going to compile successfully. Now that's ready to apply to a chart. So let's go and do that. We've got our chart. We're going to insert a study. We're looking at signals, find our outside bar signal, and that's ready to go. I'll just quickly look at the properties to show you that I've got $25 in and out, so it's a total of $50 for the costs. And we're testing with 100,000 units or one full lot. And you can see it applies to the chart straight away. Now let's go and have a look at the performance report. There's what the equity curve looks like, and that's just showing the 8 trades. That's just for 2024. You can see we're 100% profitable, made $3,800 trading that one lot. You can see the 8 trades, 100% profitable. An average trade, large average trade of 477. That's because we haven't had any losers. So that was 2024 performance. But what about looking a bit further back? Let's go back and look at the past 15-year performance. So we're going to adjust the date range. And we're going to go from, let's go 1st to the 1st, 2010. Let that load the data. And let's check the performance report. And you can see we've got 127 trades now. Percent profitable over the past 15 years is still high at 86.6%. A decent size average trade, 163. Largest losing trade, you can see that's our stop loss value plus our trading costs, our slippage and commissions. Let's look at the equity curve. There's the close to close. So you can see that we have been making consistent profits over the last 15 years. Had a couple of larger losing trades here, bit of a nasty drawdown, but since then it's been pretty good. And you already know that this is just a long only strategy. And you might say, well, yeah, okay, so it's a long only strategy. Perhaps the market has just gone up in this time. Well, I don't think it has, but I'll show you. We look at the buy and hold return. That's essentially looking at a price chart of euro dollar itself. So if anything, it's actually gone down, hasn't it? It's actually been in a downtrending market. So the long only strategy has been consistent over that time. Long only or short only strategies on Forex aren't my favourite, but I cannot deny that I first tested this strategy some years ago, and ever since then it has still been making money well into future markets or well into out of sample data. Just look at the annual period analysis. Let's look at the yearly returns. And we've already seen our 2024 with our 100% win rate, but we also had 100% winners in both 2020 and 2021, and even 2015, going back a little bit further. We have had some losing years. We saw that on the equity chart, and that's pretty much typical for most strategies. Most strategies, you're not going to get winning years every single year for 15 years straight. As I already said, even though this strategy does have that crazy high win rate, or that highly accurate, it doesn't make a load of money with its low frequency of trades and its low profit per trade. But it's a really nice strategy to have in a portfolio. In 2024, this strategy actually only made a net profit of 1.9R. But luckily, I did have some much better performing strategies throughout 2024 to trade alongside. Now, if you're interested, I'm actually planning to do a live presentation showcasing a lot of these 2024 strategies. I want to do it live so that we can interact. You can ask questions and I can directly answer them. That presentation will show what strategies have been working very well over the past year. So if you're watching this video well into the future, then we won't be looking at 2024 strategies. We'll be looking at the strategies which have been working best over the most recent year. If you'd like to get on the live webinar with me and find out about some decent working strategies over the past year, then I'll leave a link in the description where you can find out more about when and what I'm going to actually demonstrate in the live call. Now, let's go and have a look at another high win rate strategy, which complements the outside bar one. Okay, let's have a look at the second strategy, and it's this one here in the lower pane. This one again is a 1440 minute or a daily chart. This time it's using pound dollar, and I just want you to look at the trades, or where the trades occur on the chart, because I think you find these strategies can be quite complementary. If we look here, the first trade was here, 17th of Jan. We didn't have a trade here until a little bit later. We got no trades here on the outside bar strategy, but we did open one here. We've opened a trade here, and we didn't have one here. We opened one here. We were in a trade here. We had a big long period here where we didn't open a trade, but we did open a trade here. So I think you get the idea. They can be quite complementary even though they don't trade that often. Let's just have a look at the performance report. There's the equity curve. You can see it's pretty good up until the last couple of trades, which were losers. This is just 2024 only. Took 9 trades, almost 78% winners. Average trade of $204. So for those of you who are interested, actually, this works on the basis of looking at an indicator, Williams percentile, and combine that with trading only a certain time of the month using trading day of the month. In fact, let me just put the indicator on so we can see. Williams percent R, length of 14, and we're looking at the oversold level of 20. So you can see that when the Williams percent R drops into the oversold level, this is when we're initiating trades along with the correct time of the month. Okay, so we don't initiate every single trade. Like here, we've dropped into oversold, it's below 20, but it was obviously the wrong trading day of the month or the wrong period throughout the month. Nonetheless, I just wanted to demonstrate that even though we've got 2 strategies that don't trade very often at all, but they can be quite complementary. One can open a trade when the other is flat and vice versa. So that's about all I wanted to share with you in this video. I hope you found it useful. I hope you enjoyed it. If you have, then please subscribe to the channel for more videos like this one. I actually share a variation of that outside bar strategy in my popular trading course, along with a bunch more of Forex strategies. So if you're struggling for strategy ideas, then maybe you should check that out. I'll leave the links down below so you can find out more about that. Anyway, I wish all of you the very best for 2025 and hang around for more videos like this one. But until then, this is Jared Goodwin, and thank you.